Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Good morning, BigSquareRoadRoo.com with your morning horn as easier sip of chaga coffee. Yesterday I posted the Ginny Moonstone discussion, Spiritual Silver Nights. We got down and deep and dirty with silver. Something interesting that hit me, the gold and silver ratio, and then the real cause of the Maui fires. We did a look at, was it natural or was it something else? Really interesting for those into the woo-woo. This gold and silver ratio, people have asked me, Bix, when are you going to sell silver? I won't sell silver. I will transform it into a better investment. That won't be until the gold-silver ratio hits a point where I feel comfortable that it's the correct area. Right now we're over 82 to 1, which is the most insane thing probably in the history of finance as a standalone metric. As everybody knows, silver is in a massive deficit. All the warehouses are disappearing. The riggers are on their last legs. They are creating new derivatives to go on top of the old derivatives. And I'll get to that in 1 second. But this gold-silver ratio, for those of you who are big math people, the golden ratio is a famous mathematical concept that is closely tied to the Fibonacci sequence. And what I found interesting is that the golden ratio or golden mean represented by the Greek letter pi. There's that zero with the line through it. Now, it's not exactly the same as what was on the Economist magazine in 1988. That's pretty much everybody knows. It says, we're going back to a gold standard. We're right there. We're right in there. But look at the gold ratio. The gold-in ratio is 1.618. That resonates with me. That number resonates with me. This goes back thousands of years. And that resonates with me because I think that's the true number, or right in that area is the true number for the gold-silver ratio. Yes, the gold-silver ratio that currently stands at 82 to 1 should be 1.618 to 1. Now, why do I say that? Number one, both prices are rigged, so we don't know the true ratio. Number two, there's massively more gold than they're telling you. Massively. I mean, Jeffrey Christian will tell you there's only 200,000 tons that's ever been mined. I've found at least 1 million tons, at least, at a minimum. Probably much, much more. So that just gives you some idea of what's going on. Number three, all the silver that's mined, all the 800 million ounces that's mined every year, about 50 to 55% of that goes into the industrial side. So you can take out half of it when you're thinking about a ratio. That gets consumed, so it's not available anymore. It's in your cell phone, it's in your flat screen TV, it's in your solar panel, it's in your electric car. Very rarely can that be recycled. Now, when silver's $10,000 an ounce, they'll start recycling that stuff. But the reality of what is the ratio today, what should be the ratio today, it's coming out of the ground at 7 to 1. And I like that. That's a solid number. That's how many ounces of gold versus ounces of silver that are coming out of the ground. Supposedly above ground available silver is 6 billion of each. So that's a 1-to-1 ratio. But we don't know. I mean, how much of that silver, most of the gold can come back into market because it's held in vaults and in coins and bars and jewelry. Silver is much different. So it won't be coming out of the ground it won't be coming out of people's vaults at any time in the near future. The bankers, they're going to raid the bankers' vaults so that they can keep the monetary system going. But I think a better ratio, I think ultimately when gold and silver are freely traded and we know the supply-demand side of both of them, we don't right now, I think a ratio of 1.618 will be ultimately the gold-silver ratio. Right now it's called the golden ratio of mathematics. It has to do with the Fibonacci sequence and all that. So this was discovered in 300 BC by Euclid. And then in 1509, mathematician Lucia Pansafurther use the gold in proportion to describe the natural world. If you listen to my discussion with Jenny yesterday, we're talking all about gold and silver in the natural world, taking back their rightful spots that have been abused by the criminal banking rigors. So just remember that. I'll get more into that over the years coming up. Silver is trading. It's the same. It does seem to be making a bottoming. So this is the 1 year. Again, they went after the moving averages, the 50-day, the 100-day, and the 200-day. And just like down here, when silver bottomed out at $20.14, it takes a couple days for their little games to be played, and then it runs up like that. I think it's forming one of those right now. But there's a couple things in the background that I want to talk about. But it looks like it's forming one of those right now. Like I said, this is the last chance to get Silver Eagles below $30. I believe this latest manipulation is your last chance, and we should be close. I mean, if Ted Butler is correct and the commitment of traders reports that have been proven to be readable, and you can time the bottom almost exactly for the past 50 years because you can see the market rigging, we are in that bottoming phase right now. Probably Tuesday it'll stop because that's when the cutoff is, and then Wednesday it'll run. It could have been last Wednesday. Now it's more looking like next Wednesday. And when I say run, I mean break through all these moving averages and really run. And the question is, when we get up here, probably in the $27, $28 range, what kind of defenses are they going to put up for $30? In 2021, they put up massive defenses. The U.S. Mint, Ventures Gibson over there, decided to completely stray away from the hedging program because they would have been closing out hedges while they sold Silver Eagles in the January, February, March of the silver squeeze. They decided not to do that, and what happened is they lost $112 million because they didn't close out those hedges like they were supposed to. And they didn't close out the hedges because Rustin Benham of the CFTC and all the criminal bankers said, "Oh my God, we have a problem. JP Morgan, come help. Bank of America, come help. U.S. Mint, come help." And they were able to tamp down, that's Rustin Benham's term, the price of silver at $30. Why were they afraid of $30? Because between $30 and $50, there's no resistance. And at $50, the only resistance is the high from 1980. So yeah, silver is trading well below its all-time highs, less than 50%. Gold is 2.5 times its all-time high. I mean, there's just so many reasons to buy silver and swap every single ounce of gold you have. I'll get to that in a second. Jim Rickards was the one who broke the news about the BRICS turning to a gold standard. He describes it again. It's got nothing to do with gold. So people have run with it, with what they wish would happen, but they didn't really think it out, unfortunately. And Jim Rickards was the guy who started this conversation. So it makes sense that he would say, hey, we're not looking at a gold standard at all. He says you don't even need gold. All you got to do is peg it to the price, which is the dumbest thing I've ever heard because the price is fake. But it isn't dumb for China, Russia, Brazil, South Africa, India. It's not dumb because that's them playing the game, and it pushes the game out further for them. They love it that we are on an unbacked fiat monetary system. They are using it and beating the United States of America, and that's the key. Jim Rickards may be right, but the U.S. can pull the plug at any moment we choose because they are winning and we are losing. So I'll get to that in a second too. All right. So I've been diving into this TAS, and I know this is the first time. I've mentioned it a couple of times. I didn't think it was any big deal. From what I'm learning as I go a lot from Harvey Organ is that TAS is a derivative of a derivative. So you have your COMEX, and it's traded on the COMEX. These are spread trades, and they get to pick a price, but it's locked in. The key is there's two things that happen. You have a sell and a buy and a sell, and they match up. So that's the TAS trade. But because of the classification of this, they don't count it anywhere. It's not in open interest. It's not in in the COT reports. It's nowhere. It's poof. It's a side set of books that the COMEX is keeping for these TAS transactions. And that's basically and they can sell. It goes into volume, but it doesn't go into open interest because the banks don't have to report their TAS, which is crazy, right? So the TAS so far in the last 8 days, and I've been calculating this, and it's right here, traded settlement. Yesterday there was another 33 million ounces. It puts our total at like 159 million ounces, 159 million ounces of TAS in the last 8 days. That's a lot of silver to be, basically, they executed all the, or closed out all the buy side of the TAS. So you have a buy and a sell side, right? They closed out the buy side, meaning they sold it. That added downward pressure. But the sell side, which they have to close out, is dangling out there in months ahead. And that's the way, I mean, the only explanation I can give to this, the only reason they'd be doing this, if they think they're never going to have to pay that silver back, buy back those contracts. That's the latest thing. And that would make sense. If the COMEX is going to shut down, you don't care about naked shorting because you're not going to have to do anything. This was a TAS contract where you set the price already and you've sold. And you'll never have to fill those contracts. But what that also means is the COMEX has to shut down. If this is going to be the 159 million ounces is ever going to be closed out, that would mean buys of that equal amount somewhere in the future. And they can push that out to a long way away, which they are. September TAS is 3,300. December TAS. So this would be the sell probably, and this will be the buy out here. They're also known as spread contracts, but on the TAS, because there's a quirk in how it's valued, it's not counted on the open interest or on the reporting for the bankers on the Commitment of Traders report. That's where I am right now. That will change, I'm sure, because it makes no sense. A side set of books for the COMEX. I mean, I look at the volumes, I say, yeah, it makes perfect sense. But I look at the people in the industry who have no idea this is going on, if this is true. And I'm like, I've been screaming, yeah, they can click a mouse and put the price of silver at minus $40. They did it for oil. Why wouldn't they do it for silver in the last days? So I'm just like, stay on the sidelines, whatever you do. Again, this is futures and options trading. Really has very little to do with physical silver anymore. But unfortunately, we've allowed these criminal bankers to set the price using these mechanisms. The U.S. Mint is a little behind. They better get up to speed. They got to do about 2 million this month. Yeah, they're about there. And in September, 2 million, October, 2 million, November, probably zero. They'll get to 18 or 19 million, well below at least 50% of what the actual demand for silver is. For those who haven't been following this very closely, go to roadtoruta.com and listen to this three-part interview I had with the head of Silver Eagle Sales, Jack Sermon. It'll blow your mind. And I comment on the times, and he even admits it. He's like, I have no idea. If I was in Jack's brain and what he really wanted to say, I have no idea what these crazy liberal Democrats are doing to my precious Silver Eagle program, but it's not good. They told him to make as few silver sales as possible, completely contradicting the law. That's the world we live in. And there's I think five things that he admits that the U.S. Mint does, and he didn't know about some of them. He didn't know that they lost $212 million in 2021 on their hedge book when the price of silver went down. When you hedge silver that you bring into your warehouse, that's to protect you from price fluctuations. But when you hedge that silver, if it's a down year for silver, you should have a gain in your hedge book. That's the only reason to have a hedge book. But it was a huge down year for silver and a huge down year for their hedge book, which is clear manipulation. What they had to do is not close out the silver shorts, not close out the hedge, because, as Rustam Benham said, they had to tamp down the price, and that was part of the tamp down. You can't have them trying to hold down the price and the U.S. Mint trying to buy back hedges because they're selling silver. Can't have any of that. So it's all in the numbers. It's all in the annual report. And Ventris Gibson, the head of the Mint, has said 3 times in public statements that they are expanding Silver Eagle production, and yet they're only making a third of their capacity right now. This is the insane world we live in. Buy as much silver as you can get your hands on, physical silver in your own possession. Contact Andy Scheckman at Miles Franklin. Info at milesfranklin.com. Or my friend Will Lair, who I talked to, and he's offering Silver Eagles under $30. Will at perpetualassets.com, or go to their website, perpetualassets.com. That won't last long. I mean, I truly feel we are so close to that end game. Listen to Jim Rickards. Now, he's in the know on one side of the equation, which is this BRICS thing is going to explode. Everybody's joining the BRICS because nobody wants to be part of the United States and Canada and Western Europe and all that. Everybody wants to be part of the larger part of the population, especially as we go forward. But listen to what he said, how big this BRICS meeting is in late August.
Okay, so what happens when you let Saudi Arabia into the BRICS, given the other members? You have 2 of the 3 largest oil producers in the world, Russia and Saudi Arabia. You have 2 of the 3 largest nuclear arsenals in the world, Russia and China. You have, throwing India in, and some others, you have about 50% of global population, 54% of global GDP using purchasing power parity. Well, this is not the old third world. These are not basket cases. These are many of the biggest economies in the world that collectively have enormous power, natural resources, gold reserves, landmass, population, military. And again, I could go down the list. But
so listen to the interview. It's on Wealthion. Jim Rickards, Western economy is about to slam into a BRICS wall. Now, Jim was the guy who said they're coming out with a gold currency. And he clarified later that it wasn't going to be a direct gold currency, a redeemable gold currency. Can't have any of that, right? I have said for many years, if it's not redeemable, it's nothing. It's fiat. And so they are coming out with a fiat currency. It's what it is. Don't get all excited about it. If you look at the world, this is the GDP of the world. Obviously, the United States is number 1, but close behind, China. U.S. right now is at $26.9 trillion GDP. China's at 19.4. Yes, these numbers are fake and lie and all that. It could be higher, it could be lower. Nobody really knows. But in the game, as the game is being played, that's what the numbers are. And you can see China, India, Russia, Brazil, they're all big chunks. When you add them all together, and you add that they have a common enemy in that, not the U.S. dollar. They love the U.S. dollar. And they love market rigging because it allows them to win the game. But they literally have joined forces now. And the U.S., this is the time to pull the plug. Otherwise, these guys keep winning. And China, by the way, you think the United States prints money and bails out banks? We do. China does it just willy-nilly. Another $1 trillion China to bail out $1 trillion won in hidden LGFV debt by shifting it to provinces. It was just on Monday when we reported that China was facing a new debt crisis as a record number of local government financing vehicles had missed commercial payments. With Beijing suddenly finding itself on the defensive everywhere amid collapsing exports, CPI deflation, record youth unemployment, and lack of credit growth, overnight China's leadership decided to finally take some of the proactive steps instead of just endlessly talking. As Bloomberg reported, China will allow provincial-level governments to raise about $139 billion via bond sales to repay the local debt of local government financing vehicles and other off-balance sheet users. They are winning the game of printing money. And they know this is the end game. They'll never have to pay this stuff back. Create it, print it, forgive debt, you name it. Everything is about, can you sustain the unbacked fiat monetary system? China wants to sustain it. Russia wants to. Nobody wants to destroy the U.S. dollar except the smart people in the USA. Because the USA is losing on every front. every front, especially because of the fiat monetary system. We are the largest debtor in the world. And the rest of the world is using it as a weapon against us. So Jim Rickards goes into, yes, he says they're not going on to a gold standard. Not at all. Nothing even close to a gold standard. He even says you don't even need gold. They're creating a fiat currency. They're creating a fiat currency called a brick, and they're going to attach it to the dollar value as traded on the global markets, meaning the rigged price of gold. So 1 ounce of gold will equal 10,000 bricks or whatever it is, which is absolutely the same thing as any other fiat money. You don't think the bricks are going to create money out of thin air like everybody else is? We have a BRICS nation failing. Oh, let's create more bricks. Bricks the currency and give it to them. There's no restraint on what they have to do. And not only that, they're not canceling their own currencies. This is just a trade currency, a trade fiat currency based on the price of gold, the rigged price of gold. It is ridiculous that even, we have to talk about this stuff. But ultimately, everybody's going to have to declare how much gold they have if they want to participate, because this will fail. This whole BRICS thing will fail because it's fiat. That's all it is. It's fiat. CBDCs will fail because they're fiat. By the way, CBDCs are completely in violation of Reggie Middleton's patent, as approved by the United States, and 2 patents in Japan. We will see how that rolls out. So yeah, don't get excited about August, other than it gets people thinking and talking about it, and maybe it is a precursor to something real coming in where people actually, like China says, we don't have 2,000 tons of gold. We actually have 250,000 tons of gold. And the U.S. comes out and says, yeah, we don't have 8,000 tons of gold. We have 1.6 million tons of gold, stuff like that, which is probably closer to the truth, 1.6 million, and still more on the ground. But, I think China has a lot more too. So we will find out, I think, soon enough as the whole thing falls apart. Again, it is not China that wants to blow the system apart. It's not Russia. It's not India. It's not even like Venezuela or countries that don't like us. No, they want this game to keep going because the U.S. is finally losing the game. It's the U.S. that will ultimately pull the plug on this. By the way, Poland continues to aggressively buy gold. Poland's National Bank has increased its gold holdings by 2.3 million ounces since the start of the year. Yeah, sure they should hold gold. Yeah, but here's another thing to think about if you are a gold investor as opposed to a silver investor. Gold, there's 6 billion ounces of gold that can fairly easily come back into the market. 6 billion ounces. This is just going off their numbers. Whether you believe there's more gold or not doesn't matter. Just off their numbers. If we do have, and a lot of this gold is held by bankers, big bullion banks like J.P. Morgan, Citibank, UBS, Deutsche Bank, right? What happens when those banks get in trouble for all the derivatives? Say the derivative market blows, they're going to liquidate their most liquid assets. And this goes for Bitcoin too, by the way, my friends in crypto. All other cryptos take their price pivots off Bitcoin. So everything should go down, but bankers will be selling their Bitcoin just to stay liquid. By law, they have to liquidate everything. And what's the easiest things to sell? Bitcoin into a crashing market. Gold. They'll have to get rid of all their gold too. Remember, these banks are about to go bankrupt, belly up. They have to liquidate all their assets. It's going to get really ugly. So yeah, I do expect a big crash in everything. That's why everybody's got to be on the sidelines. Now, I don't know of any big central banks or countries that own stockpiles of silver. J.P. Morgan had a 1.2 billion ounce stockpile. I believe it's all, according to the data, been leased out to Bank of America. Now, how much did they give back at the end of lease? I don't know. you don't have to give the asset back at an end of a lease. There's many different structured lease options that might be in play here, and I do think they are in play. Maybe it is the U.S. saying, okay, J.P. Morgan, we'll let you off when they started this, Bank of America leasing thing. We'll let you off of your rigging apparatus when we'll find you $920 million, but you got to get rid of that silver and you got to get rid of it to us, to the U.S. Mint, because Ventris Gibson said they've greatly expanded Silver Eagle production. But they did get rid of it to Bank of America through a lease, and then Bank of America has all these silver leasing back-end programs. You could have a fixed buyout on the back. You can have a fair market value buy-in. You can have a return possibility, but I don't think they did return it. So I think that silver that has been released from J.P. Morgan is either back at the Mint or in the hands of Buffett or Elon Musk. Those are my three guesses. I have an inkling because of what they put on the back of the new Silver Eagle, that the eagle is adding to the nest. I have an inkling that they are using that silver to make another at least 1 million ounces of Silver Eagles for the introduction of a new monetary system. And by the way, another thing about Veritasium, if the U.S. went on to a gold and silver standard, and if we started using specific coins as identified by the crystalline structure of every single coin, the technology invented by Honeywell, and the guy at Honeywell in charge of that program was David Ryder, the ex-head of the Mint and the guy who just left the Mint after Trump left, and the guy in charge of the redesign of the coin. It all fits 100% perfectly. You can specify each coin to each person. But here's the deal. If the United States wanted to go use, let's say, a blockchain type of tracking system so that you can sell little bits of your gold and silver on your phone, and the U.S. government will track it on a blockchain, open source blockchain, down to the last gram of silver and gold. If you wanted to do that, you are in violation of the Reggie Middleton patent unless you make an agreement with Reggie. That is a huge part of the Reggie Middleton patent, facilitating peer-to-peer transactions. So, again, there's so many reasons. And yes, I agree that it looks like a long shot. The Veritasium, especially the Veritasium token. There's Reggie Middleton and his patents, which he owns, and then the Veritasium tokens. But the U.S. government seized them, 98 million of the 100 million, and has not done a thing with them. They are frozen and staying there. Every other crypto that has been attacked by the SEC has either folded or everything has been resolved. It's just all been resolved, except one, and that's the Reggie Middleton Veritasium tokens. That has not been resolved. Those are hanging in limbo. So we will see. Yes, it's like buying a lottery ticket, but if that lottery ticket pays off, look out, baby. Anyway, that's what I got for you today. There's just so much going on. Again, it looks like the banksters. Let's see what's going on today. The daily. Yeah. It looks like they're going to hold off till next week until they. It's when these moving averages right here, when these get violated back up to the upside, this is what happens. It starts to spurt. And then the question is, are they going to defend $30 again? I don't know. I mean, I don't think past September. And if they don't, it's game over, shut down the comics. And by the way, all those TASs, the trade at settlement, silver shorts, silver buys that have been sold, that sells need to be bought back at about like 160 million just in the last 8 days, they would all default. Voila, the get out of jail free card for the bankers. Not all of it, but because there's other things on the comics. And what happens when the comics defaults? And why did Jeffrey Christian come out and say, hey, we could have a force majeure? He expects a lot more of them. Go around the problem. Get yourself physical silver in your own possession. Call up my friend Andy Scheckman. I'll be talking to Andy soon. And say, hey, it's Friday. I know it's Friday, but get out of the swimming pool in Florida and go get me some silver and send it to me. Get it in your own possession. That's my take. This is Bix. I'll talk to you.